There are certain businesses that are going to be crushed and find it really difficult to survive and be able to be profitable in the next couple of years with interest rates higher. And this really comes into play, particularly for a lot of businesses that were very popular in that pandemic year of 2020 into 2021. A lot of the new IPOs, a lot of the businesses that haven't been making money, Airbnb, Snowflake, Robinhood, a lot of the types of businesses that a lot of retail investors found very attractive because of the attraction of potentially making a lot of money, the share price might go up. Those businesses are really going to find it tough because higher interest rates are going to make those levels of debt that those businesses have more challenging to service. And when you have an environment where you have a slowing economy, where consumers and businesses are likely going to spend less money, and those companies that are just trying to get going desperately need cash and they've got to service the debt they have with rising interest rates, some of them won't survive at all. I'm not suggesting the names that I just mentioned before will not survive. I think they will, but there'll be plenty of other businesses that won't. And if you own businesses right now in your portfolio that have a lot of debt, that are businesses that are relatively young, that have not had decades of basically proof positive that they can get themselves through challenging periods economically, then you're likely going to have a portfolio and a few businesses that are really going to disappoint you. What we're going to see right now is a transition from a wants-based economy. We've got a lot of consumers that have had a lot of money. They've been wanting to spend the money on holidays and on new cars and new furniture and all that sort of stuff that you want to have. They could afford that and they bought it. What we're going to see now is a transition into an economy that is going to be based on a needs-based economy. And the businesses that will likely thrive over the course of the next 6 to 12 months and endure over time are the same businesses that we often talk about here at Trading Mastery that have big, powerful, predictable earnings. Businesses that consumers need. Businesses that they're not going to compromise on. Businesses that have billions and billions of dollars of free cash flow that can still invest in themselves, can still grow their earnings, can still support their businesses through challenging periods, that don't have to go out there and borrow money. If a business needs to borrow money in the next 6 to 12 months to survive, forget it. You don't want to own it. But most people are not buying shares in the share market based on the financial conditions of the business. They're just looking at some sort of squiggly line on a chart, thinking that's going to tell them the price is going to go up. You've got to delve a little bit deeper than that. So in a nutshell, if you own businesses right now that have a lot of debt, they're young businesses, they're only startups, the share price has probably been screwed already this year and will probably go quite a bit lower. I'm not saying it won't recover in a long period of time. It may do that, but the businesses you want to own, the businesses that will endure over time, the businesses just keep compounding at the same businesses that were doing it back 5 or 10 years ago and will continue to do it into the future. There's nothing wrong with owning a new startup business from time to time, but you've got to know that business incredibly well and willing to be very, very patient and not leave your portfolio overexposed in one business just because it might be a good investment in the long term. You want to have your portfolio positioned with the vast majority of the money in those big, powerful, predictable earnings winners, because that's where the money will come back to when the money comes back into the market. Now, by the way, markets fell very sharply in the US on Wednesday, and they fell sharply in the Asian trading session Thursday. Do not be surprised if we see a market reversal and a ripping rally between now and the end of the week. See you next time.